Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Tuesday, January 6th, and to those of you that are with us, I want to wish you all Happy New Year once again. Now, my name is Raleigh White, and I'm coming to you live from a nice sunny day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a continued focus on trading small cap stocks, including the different order types that he uses for trading small caps. He's going to give us some critical tips on the strongest areas for placing your stop losses. He's also going to share why indicators aren't always a good gauge of price action when looking at small caps. He's also going to talk about managing a trade for optimum results, and he's going to give us a midday market update on the top stocks that he's looking at right now, and he's going to give us a fourth quarter earnings preview and what he sees lying ahead. Now, if any of those of you out there have any questions during Roger's presentation, please type them in the chat window, and we'll address those periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that I've opened up the chat room to everyone, but we do have some ground rules, okay? Always be kind and supportive in your posts. Please keep to the topic. There are no political discussions allowed here whatsoever. And also keep your side conversations to a minimum so that those of us that aren't involved in those conversations can focus on the education and the information that Roger is sharing, because he's here to give us an edge in the markets. And after all, to help us become much more confident and consistent as traders. Now, if you were with us this morning during Roger's 8 o'clock morning show, you'll note that there were several catalysts that we needed to be aware of today. On the chip front, we noticed that MCHP was up 4% coming into the open. In the home builder sector, we noted that DH Horton was down 1%. On utilities, VST was up 4%. In Asia, Shanghai up 1.5%. And the Nikkei was up at 1.3%, once again, setting a new record high for them. And as a result of that, that was going to be giving us some tailwinds coming into today's open. On Infotech, we noted that AT&T was down 1% coming into the open. And with regard to the Fed, nothing really of note. There was one FOMC speaker that was scheduled to speak, I think, at 8 o'clock this morning, but outside of that, nothing of any key significance whatsoever. Now, for those of you that are wondering, why do we even talk about catalysts? Well, from Roger's perspective, if there's information in the market that's either known or will be known during the trading session, but is not yet priced into the market, those are volatility flashpoints that we need to be aware of. So when we're looking at chips and home builders, utilities, things of that nature, we just want to make sure of what's happening in those sectors as we consider taking possible trades. Now, as far as Roger's large cap market watch list is concerned, he shared 16 stocks with us today, 9 on the short side, and we see them listed here. You could take a screenshot if you would like, and 7 on the long side. And, as I mention every day that I go through this, what I really appreciate is that Roger brings up each one of these tickers because that chart tells a story. So he tells a very brief story. He talks about what he's looking for, and then he moves on to the next ticker. Now, because they are on his watch list doesn't mean that these are automatically trades he's going to take. They are on his watch list, which means they're setting up as potential trades that he might take. And if there are any of those tickers that meet his standards, then he'll more than likely post those in the trading pit or in any of his other premium alert services that he has. As far as his pre-market comments are concerned, we noted when we came into the room together at 8 o'clock this morning that the futures markets were up and they were pretty darn stable coming into the open. He also shared that the put-call ratio was perfectly balanced, and he noted that the VIX was still low near the bottom of its range below the 15 level. He said as far as momentum is concerned, it looked like things were picking up as 209 stocks were now above the 90-day average. And as a matter of fact, that contrasted with 37 stocks that were below the 90-day average. So definitely a bias on the momentum that was picking up. He also noted that as far as the NASDAQ 100 is concerned, that there were 50% of those stocks were now at the 50-day moving average. That's up from 42% yesterday. So we're seeing some momentum there in the market. But he also pointed out that bonds remain stubbornly low in the range, in their range. And his concern there is as it sits there and consolidates right above support, the longer it stays there. Roger's fear is that as a technical analysis and the way this descending triangle is shaping up, that bonds will more than likely could possibly move lower. And he doesn't like that to happen when we're looking for the market to bounce back because the rest of the market's trading near highs, right? And we need the bonds to play along. So he wasn't predicting an action there. He was just basically calling it like he sees it as a technical analysis. So as far as today is concerned, what was advice? Well, guys, it looks like the markets are basically generally bullish, but there are some lagging indicators out there that could keep things in check. Bottom line, from his perspective, he says, don't, fall for any head fakes. And always at this point in time, look for confirmation when you're looking at getting into a trade. And he shared with us several techniques when you're looking for confirmation that helps you, in particularly when you're looking for stocks and things of that nature that are going to be breaking out. So once again, we're delighted to have you all here with us. Roger's got a great agenda that he's put together, a lot of focus these days on the High Flyer Club and the new program that we have around trading small cap stocks. And today, Roger's going to talk about the different order types that you can use for trading these small cap stocks. He's also going to give tips on the best areas and where you should consider placing your stops. He's going to talk also about why using indicators aren't nearly as effective when it comes to gauging price action with these small cap stocks. He's also going to continue to tell us about his plans or how he goes about managing a trade for optimum results. And he's going to give us a midday market update and the top stocks that he is currently looking at to the long side and to the short side. And finally, folks, he wants to give us a fourth quarter earnings preview and an expectation as to what lies ahead. He shared with us yesterday that the source that he likes to refer to as far as earnings concerned aren't going to be publishing anything until Thursday, but nonetheless, he's got some pretty good ideas that he wants to share with us as we head in to the earnings, the fourth quarter earnings season. Now, if you've got any question during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And please note, folks, that we have opened the chat to everyone and we do have some ground rules. If you're going to post, always be kind and supportive. Secondly, please keep to topic. Number three, no political discussions, allowed whatsoever. Also, keep your side conversations to a minimum. Discussions between one or two of you don't serve the rest of us any purpose, and it takes away from our ability to focus on the education and the information that Roger is sharing, because after all, he's taking time out of his day to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. And with that, folks, let's say hi to Roger. Let's say hi to Matt. Guys, how you doing today? Happy Tuesday. I feel like every day this week I need to say Happy New Year's.
Yeah. Well, I think the truth is a lot of people are still coming back. The parking lot is now finally looking like a normal parking lot. And today, by the way, 32 years since I've been trading.
Yes, that's
32
right,
years.
Roger. 32 years. Oh, can you think back to day one?
I remember where I was. I was in Lake Arrowhead recovering from the worst hangover ever with my girlfriend at the time. Wasn't my wife. I had a long relationship when I was in law school. I was with somebody for about 5 years, and then we broke up right afterwards. I was with a close friend. We went to Big Bear Lake, which is two hours north of Los Angeles. We went there for a week, but for some reason we didn't go there during New Year's. We went there after New Year's, like the first, and we were there. And I was reading, and I remember exactly what I was doing. I was reading Peter Lynch's book, One Up on Wall Street. That's what I was doing with a nasty hangover. I had the worst hangover. And I was doing that, and that's what I was doing 32 years ago today. No
Wow.
joke. That's exactly what was going on. And then I already opened up I opened up my account as soon as I came back from the mountains with Kennedy Cabot or Ken. It's a long time ago. They were eventually bought out by Ameritrade, which was bought out by Thinkorswim, which is bought out by Schwab. But Kennedy Cabot, I think they were called. They were all over. We had one on Wilshire, one on Ventura, like 5 or 6 in LA. And I remember, Raleigh, this was the funny part because, this is before the internet. This is like right when the internet
Oh, yeah.
started. Like,
Right.
and what a lot of folks did, especially older older meaning this is when I was in my 20s, so older meaning anybody over 35 or 40,
40,
back then.
right. Oh,
Yeah.
guys.
What a lot of guys would do is they would hang out there all day long, and there was like a big TV, and it had all the quotes there, and they can go and get free quotes without their little card, and you had to call in. They would give you a little card with a code, and you would have to call in to get the quotes. I wasn't having any of it. I went and bought a quote trek. So I had a little quote trek, and I would have it all over. Anyway, the point is, this was 32 years ago. A lot has changed, but you know what's funny? A lot has not changed.
Right.
Basic price action has not changed. Human psychology has not changed. And let's put it this way. I only wish I could have what we have here now for one day. If I had what we had for one day here, it would probably shave 5 to 10 years off my. I mean, back then it was like blind leading the blind. It was, you would get all your information from Borders or Barnes and Noble. We didn't have Borders in LA. Barnes and Noble. You'd spend like 4 hours there looking at all the trading books. Most of them, 90% of them were commodity books made for,
Yes.
republished for the stock market, as I keep telling everybody that. And I would buy like 5 books every month, and then every month I would go back, and a lot of times you would see the same people there. I met a lot of traders there in that aisle, and a lot of attorneys, a lot of this is when I was in law school, so it was interesting. I was meeting attorneys, and they were like, "Yeah, you could make more money trading. You shouldn't go to law school." I'm like, "Oh, don't tell me that." But anyway, it was 32 years ago. It was
Roger, fantastic. Well, I can tell everybody here, I'm pleased to say that I've known you for 14 years. Your last 14 years, and I've enjoyed our relationship. And you are as energetic today, Roger, as you were 14 years ago when I met you. You were with Market Geeks, and I was with Rockwell Trading,
That's
and we were
right.
doing some things together. And here we are today. So, once again, congratulations. And I will say this, Roger, because you won't say it about yourself, but we are lucky to have someone like you with your 32 years of experience, not just the range of things that you have done, Roger, throughout your career, to where you are today, working with some of the richest families in the world to now working with us as individual traders as you look to go ahead and bring us so much of the education, the platforms, the strategies, the techniques that were successful for you as a hedge fund manager. You're also teaching us how to apply that in our own trades. And as you just said, we're living in the golden age of information where we've got high speed internet, we have access to data, we have AI, all these things that you wish you could have for one day back in the day
Yes.
is with us
Yes.
today.
Yeah. Yeah, absolutely. Absolutely. And by the way, Raleigh, we've been taking some scalps. I've been having some fun with folks today. I've been multitasking to say the least. We had a lot of not a lot. We had we had the most activity, I think, in 4.5 months in in
In the high
in
flyers.
the high
Yeah.
flyers. Yeah,
Yeah.
it was just like there was just so much stuff going on. But we were consistent. We took two very small losers. We took one winner, a small winner, and we took two small losers. We followed our rules down to a T. We respected everything there, and that's how it is. Now, folks, I just want to make sure everybody understands. With these small caps, the goal, just so you guys understand the difference, okay? I want, and by the way, not one person send me an email or anything like that. Everybody seems to be very happy. If we're moving on the right track, we're following the rules, and that's what leads us to our success over time. But I want you guys to understand, large cap stocks, they chop a lot more, right? So they give you staying power, but at the same time, they don't move, they don't explode. You see, These small caps, they can explode. So we have to be really, really careful with our stop losses. Like, let's say Apple goes against me $3. Woo! You know what I'm saying?
Hmm.
App. Yeah. But if a little cocker that's worth 50 cents or $1 goes against me, you may not see that money again. So we have to be very, very the key here is to follow our rules. The profits will come because these things are exploding, right? So we're going to we'll get plenty of profits, but we have to control our risk. The
Yep.
biggest thing with these small caps is you got to control your risk. So Shannon says high flyers were super fun. Yeah, it's really fun. It's fun. It's like playing a video game. Like, okay, put a buy stop here, raise this buy stop, lower the buy stop, sell this, do this. Notice very different characteristics. It's like a different person trading that versus the pit. But they both, believe it or not, they both have about equal profitability at the end of the year, but they just go about it much, much different. The pit will have a win rate of 94%, but you're going to have a bunch of little winners and a few large losers, which we haven't had in a few months, but that's not here nor there. In the in the in the trading zone, why do I keep saying trading zone? Excuse me, high flyers, high flyers. You're going to have in the high flyers, you're not going to have that 94% win rate, and you don't need it. Remember, I showed you that graph. You don't need that 94%. Honestly, you don't need it. If I could make the win rate 40%, that would really be ideal. But I'm not going to be that low. But what happens is you're going to have a win rate of say 55 to 65%. Your losers are going to be very small, but then the winners are going to just overshadow them.
Right.
So it's a very different dynamic. I want you guys to understand that. Very, very different dynamic. Because small caps, you don't trade the same way as large caps. Okay, you just don't. You just don't. So the key is how well am I respecting those stop losses? How well am I getting stopped out? That's the key. The profits will come on their own. Trust me. It's how disciplined we are. And just to show you how disciplined was I today, like down to a cent, right? Down to a cent. That's how you trade small caps. You don't nilly-willy let them loose. Oh, we'll don't worry about our stop loss. We'll see what happens. No, 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 no. You don't do that. You do that with Microsoft and Google. You don't do that with small caps. So I want you guys to understand apples and oranges, like really, like apple and bananas. Okay, like totally,
Or
totally different.
Volkswagens.
Yes, yes, yeah, exactly, exactly. Yeah, they need management. They need constant supervision. They're like little kids. They need constant supervision. And large caps, well, they're like adults. They can kind of take care of themselves. Now, you'll be happy to know, Raleigh, we did scalp. How many scalps did we do today, folks? In the pit. Maybe
In the
people here
pit,
can help
right?
me out.
Yeah.
I can't keep track. Honestly, I can't keep track. I got too many fires in the kitchen. I can't keep track.
And I
But
also
I
think you did an impromptu poll and people said, keep on the scalp. Because your concern has always been with scalps. Are they too fast for people?
Yeah, but I used to
Yep.
issue them. Now I don't issue them. I'm just like, here, take the scalp. I'm scalping. Now you
Yep.
know it's a scalp. You don't have to take it. Because what happens is this. This is what happens, Raleigh. I'll put on a trade. It'll be a scalp in my mind. Somebody will go and buy an option that expires in 6 weeks. And then I'll take the trade out with 30-cent profit and they'll be like, uh, what did I just do all this for? So I
Yep.
don't want, I'm scalping this right now. In other words, buy an at the money option that expires in 3 days or 4 days.
Hmm.
And if it doesn't go your way, just get it. That's what I'm trying to say. But
Yep.
I started doing basically, I'm not doing anything differently. It's the same trades I've always done. I'm just now instead of saying buy, making it look official, I'm just, hey, this is a scalp. Okay. That's now so don't come crying to me when you see me getting out in 5 minutes or 10 minutes. And the last one is my MO. We're in that right now as a scalp. These are not official trades. So far this year, we've had 2 official trades. We've had Micron in the pit. Oh, people love that Micron trade. They still talking about that Micron trade. And we had Google this morning, and people were sending me a bunch of very, very hot emails about Google, about how much money they made versus how much money they lost. So I'm very, very happy about all of this. Things are moving in the exact direction.
Well, true to form, once again, Roger, you formed the pit with the only ground rule is this is how I trade.
Exactly.
There are no
Exactly.
other ground rules. There are nothing else that you have to adhere to. This
Nope.
is what you do.
Right.
So there you go.
Right. Yeah. Thank you. So yeah. There's no rules in the pit, but we do have a 94.3% win rate now. It went from 94.1 to 94.3, Raleigh,
Damn
believe
it,
it or not.
Roger. I'm
Matt, can
out.
you hook me up?
I'm
Yeah.
out.
I don't know. But anyway, we're still good. And our swing trades are starting to come back. We took a Matt took a really nice profit this morning on what was it, Matt?
We took a few this morning. We took MRK and True Trend, and we took CCL and Stealth Surge.
Very nice. Very nice. I was too busy with the small caps. I
That
was
was
too
great. And I know, Roger, you've been very careful about swing trades, given the fact that the markets just haven't been doing anything, no momentum really.
Yeah. I've
So
been
very,
really,
very
really careful.
careful. And that's good. And, and that does bring up a question, that came up from several people here in the room. And they're going, Roger, how do you manage all these programs when you're so actively involved? And I think people need to understand that it's Roger, Matt, and team.
Yes. Yeah. It's not just yeah, Matt, it's Matt and I. Well, Matt's focused on the trading. Matt is focused on Trading Zone Live. I'm focused on the pit and the small caps. That's all me. And then together we do the swing trades because swing
Right.
trades are slow. So it's kind of like, hey, you guys have seen me like, thanks, Matt. You guys have seen me. Hey, Matt, what do put this stock on your list, or hey, put a star by this, or are there options available? Or he'll say the same thing to me. And those we usually find 5 or 6 stocks and we execute those at the end of the day. So it's a team effort and a lot of alerts, and a lot of working before the market opens. See, the reason I launched the small cap, I'll tell you why I launched the small cap, because the way I teach with the large caps, we don't do anything till 10 o'clock. The only thing we do is liquidate. I can liquidate in my sleep a position.
Right.
We don't really do anything till 10. And as a matter of fact, I've noticed that looking at our trading logs, our winner, and we don't have too many losers to tag. We only have 25 losers in 2 years. Okay. So, but
That's
looking at
true.
those losers, I found that the majority of those losers occurred from me taking either shorts or taking trades early on in the day. So, what I've done is I'm trying to make the shorts extra selective, like when the market is really breaking
Makes
down,
sense.
or,
Yep.
or just give them a scalps, which I've been doing today all day. All the trades have been scalps, or uh, pick trades later in the day, like I've been giving you guys with Google and Micron. People seem to like those more. So I'm trying. So it left me. So I would get to work and I would basically have an hour where I'm like just sitting and watching paint dry, because I do all my work for the large caps pre-morning. I have my alert set. I'm not taking any positions. So I'm like, I have an hour to kill. So I'm thinking, hey, the small caps are perfect because they have all the good stuff happens between like 9:30 and 10:30. So and then if not, whatever's left, that's easy to manage. That's like just put a profit target there and forget about it. But 9:30 is when I have to be in front of my monitor. So now I'm leaving. I'm adjusting my schedule to leave the house 5 minutes earlier, 10 minutes earlier. Come here like by 9:15, so I have 15 minutes to work on the small caps, which is all I need. And then we have another 45 minutes during the market. So I did it in a way where it wouldn't interfere with anything. That's the reason why I decided to do it. It just doesn't interfere with my schedule. That's the reason why. So you guys kind of understand that. All right, let me talk a little bit about the market. Let me talk a little bit about the market, and I want to talk about orders. Actually, a few people emailed me and said, "Can you review orders?" And orders are so simple, I take it for granted, but I'll review these orders, and this will apply to anything you trade. Doesn't matter if you trade small caps, large caps, options. I'll explain everything to you. Now, okay, so let's talk a little bit about the market. The market is actually looking fantastic right now. We're coming back up. This is very, very nice here. I like what I'm seeing here. I like this clean breakout. Notice we're above this area that I drew for you. We're above the 8-day EMA. We're moving in the right direction. I mean, we are moving in the right direction. Volume, I mean, we're still really low. This is low volume. The volume has to pick up a little bit, but we're okay. QQQ is finally above the 8-day EMA, which is really fantastic. Really fantastic here, okay? Really, really nice. I like how that's looking, and mags are not looking that great. Things will look a lot better when mags will go above the 50-day moving average. This is a big red flag because if the mags are below the 50-day moving average, that means institutions are not buying mags. Institutions not buying mags is not a good thing, okay? Bond market. Bond market and mags. Those are the two things giving me the willies and keeping me really from increasing my position size. Okay? Really, really important. Now, I want to explain something to you guys. And this part actually takes a few extra years to understand. And right now I'm talking about the large caps. When you're trading the large caps, what you're really trading is the SPY. You're just you're using them as a proxy for the SPY. Okay? Because they have a correlation of 2/3 with the SPY. See how this stock goes up right here? I mean, the market, this is the SPY. It goes up. See here. How about Tesla? Tesla starts turning. Microsoft starts moving higher. Intel going up. All this is caused by this, the stock market. The stock market dictates those stocks. So if you went short your favorite stock right now, and it's a large cap stock, and you could be the best technician in the world, the odds are you're not going to make a lot of money. Even with MO. What is MO doing? It's not going down anymore. It's just stalling here. See that? The market dictates where to put your stop losses, where to put your profit targets, whether you're going to go long, whether you're going to go short. The SPY dictates all of that. When you're trading large caps, you can't get away from that. Small caps, SPY, I don't have to look at the SPY. As a matter of fact, I don't look at the SPY. But for the large caps, that's the only way to trade them. You have to trade them in light of what the market's doing. So what do I mean by this? And I'm going to use Omar as an example, okay? Omar, I hope you don't mind. I'm going to use yesterday's session as an example. Omar went yesterday. What did the market do? It gapped up after the open. It went up a little bit very slowly with very little range, and then it just consolidated and then undid it. It didn't have any momentum. It didn't have any high volume bars. I mean, high bars. When it doesn't have any high bars, that means there's no institutions. If there's no institutions, you're not going to get any follow through. And we already know that volume yesterday was really low. So Omar is like, I'm not having. He made money. That wasn't the point, but he didn't get the upside he was looking for. And I explained, Omar, you're not going to get this upside if the market isn't going crazy. The only way you're going to get that upside on individual stocks is if the market's going crazy. The market's not going crazy. You're capped. Your upside is capped. So my point is, whenever you're looking to set your profit target, if you're day trading or your stop loss, and you're looking at large caps, you need to very, very simply, what you need to do is always see what the market's doing. Ask yourself, is it trending this morning? Is the ADD up at 1,000 or is it at 100? If the ADD is at 100, do you think you're going to get much movement during the day? Probably not. So again, always see what the SPY is doing. You're not, if you think you're trading that stock, but you're trading 66% SPY anytime you're in a large cap stock. Okay? Just FYI. Speaking of which, if you're scalping MO, I'm going to, 1 second. I'll focus it out. Okay. That was that. Done with MO. I think we got in at 11:51. 11:51. About 25 cents, 30 cents. From here to here. There you go. Not bad. Okay. All right. So I just want you guys to understand what I'm saying right now. This is why we spent so much time trying to figure out what the market's going to do, because it really tells us what the rest of the stocks are. It gives you a really good gauge. Now, if a stock is having news, which usually means unusual volume, that news supersedes whatever the SPY is doing for
Right.
like 2 to 3 days. Small cap stocks, it can be as much as 5 to 6 days. But small caps never come. I'm talking about the volume influencing the stock. Small caps never are not correlated with the overall market. So I just want you guys to anybody make money on MO just out of curiosity. I mean, we only have almost 2,000 people in that room. All right, Solaire made money. Good. Some folks made money. Richard made money. Sean made money. Bob made money. Sandy made money. All right, 33%. Very nice. Very nice.
And those were pit trades, right, Roger?
Yeah, we did several today. We did. Oh boy.
Yeah,
Hey,
too many to count.
folks,
Yeah.
can somebody remind me how many? Do you guys want to remind me what we did in the pit today?
Yeah, we'll do.
All right.
Yeah.
Let me do this. Let me show you this. Okay. Let me show you this. Okay, 18%. All right. So let's see. Came in pretty hot here. Okay. We started off by taking a $3.50 or $2.50 profit on Google from overnight. And if you missed the exit, it went $1 higher. Then here's Google again. Got rid of Google. Added AT&T to our short list. Scalping AT&T to the downside. They made money on that. Scalping Roblox to the downside. They made money on that. Taking profit on T, holding our blocks as a scalp. Looking at these two for longs, adding Amazon to our long list. Took profit on Roblox short scalp. Anyone take a bite out of T and Roblox? Yes. Adding Tesla to our short list. Adding DAL to our long list, adding Orly to our short list, scalping Tesla to the short side, heads up. They made money on Tesla. Karen the Shark sent us an email, 11% on scalp on Tesla. Took profit on Tesla. A few people had question marks. I don't know why. I got another email from Greg, 8% on Tesla. And if that's you on Tesla, I gave you another heads up on Tesla because it went lower. So all of you folks who didn't have a chance, all of you questioners who didn't have a chance to make money on Tesla could have made money on Tesla. I asked folks if they liked the scalps. People said, yeah. A lot of people said yes. I gave you a bonus trade on Zeta. That trade is still just sitting there, not really doing anything. I gave you a scalp on MO to the downside, and that's before lunchtime. What do you think about that, Raleigh?
Man, I think that's fantastic.
And by the way, all those trades made money.
Yep. And so there's a number of people here in the room that are saying, "Hey, how do I join the pit? How do I join the pit?" You know, which is a fair question if you're not there. And let me just post this to everyone, okay?
Why not? Why not?
Yeah. The best thing that you can do at this time is just call us. And
Yeah.
I'm gonna post the number right here. Call our sales department and they'll be glad to hook you up with that service or discuss it further. So I just posted to everyone the direct number to our sales department, and if you're interested in the pit or if you're not in the High Flyers Club and you're interested or whatnot, just call 904-404-8873 and they'll help you out any way they can.
AAP.
And people are saying, do you have links? No, I don't have links to that. Any links that I have are probably from links from, past shows that we've done, and they'll probably lead you to a dead end. So just give them a call.
Yeah, give them a call. Really, just talk to them. Communicate with them. They're there. We have over 100 people in this company. I mean, they do stuff, But I'm going to ask you guys a question. And have you ever met anybody who trades like me before?
No.
No way. And I don't mean that in a bad way. 32 years today, folks. 32 years. Oh God. Anyways, let's continue. So I wanted to talk about different order types, okay? And I'm gonna say that I probably should have done this a while back. It's just so basic that I don't really spend time on it, but here, let's just do this.
Well, what's kind of interesting here, Roger, is that, if we reflect on it, so much of what we talk about on a regular basis is how to trade the markets with options. But now we're talking about buying the underlying stock. And so
True.
for some people, they're just not familiar with the terms on buying and selling stock. So I'm glad you're going to go through this.
Yeah, I think this is uh oh, I do have both 5 minutes. Thank you, Richie. I appreciate it. I was like, what's going on here? Again, I'm still, I still haven't come up for air today. I'm going to come up for air at about 2:30. So I'm still like I'm in my zone right now. I'm still in my sniper zone right now. There will be stuff for here for high flyers. Yes. This doesn't need to be in the members area, but if you want me to put it in there, well, here, I'll tell you what, I'll put this doc in there. The truth is, I'm going to tell you guys something. What I'm going to talk about has been explained in my getting started guide, my VIP boot camp that I did 7 years ago, and it should be available to everybody for free in the VIP room. This is discussed in there. Okay. I did that 7 years ago. No, almost 8 years ago, as I was driving from Los Angeles to Florida to move here. So if you haven't seen the 24 module or whatever module boot camp, you should get access to it. It doesn't cost anything. I mean, I used to charge $5,000 for that in the VIP room we're in right now. You can get it for free. I would do it if I were you. It's really good. As a matter of fact, the last module, putting it all together, was first week that Gramster, was working as my clerk. And he came right in time to help me put that last module together, just to give you guys some context. It is great, and it's not going to cost you anything. All right, so different type of orders. Market order, limit order, stop order, stop limit order. See, stop order, market order, limit order. Am I free? I mean, that's all I use. Am I missing something? I think I got it all. Raleigh, again, maybe
No,
I've been doing this for too long, and I'm sure
those
there's
are the
others.
ones I'm familiar with. Yep.
I mean, I've never used. Let's put it this way: one cancels the other is not an order. That's a procedure for canceling an order, and you still need to know what the order is. Okay. Now, a buy stop is a stop order. The trailing stop is a stop order. See, you guys are confusing methods of using orders with actual orders. Okay. There's a gazillion ways to play with orders. There's moving up and down your order, trailing. There's OCO, one cancels other, which is usually a conditional order or a bracket. These are just procedures. These are procedures for these. You got to know these. This is what you need to know. This is all just how to work these. And every brokerage has a different way of working this. Let me give you an example. Trade Zero, for example, they don't have a mechanism for me to put a profit target and a stop loss on the graph at the same time and erase one or the other. Or that's one cancels the other. See, that's just a mechanism. Don't worry about the mechanism. You need to understand a fill or kill order. It'll either fill it immediately or it'll kill it. But what is it going to fill or kill? A type of order. So you need to understand the type of order it is. All this stuff, fill, kill, this is procedures. Procedure of what happens to your order. Don't confuse procedures that happen with your orders with actual orders. Okay? Big difference. Big difference. Don't confuse the two. Okay? Like, oh, good. Thank you, Cyrus. I appreciate. See, this is good. I need all this help I can get. Good till cancel. Day order. See, this is procedures. Now, what a lot of you do is, not a lot of you, maybe two or three. Oh, good, Peanuts. So happy to see that. What some of you do is you take these and you start meshing them up with these. Don't do that. Market on close. Thank you. See, this is great. Market on open. There's millions of them. And I'm going to tell you something, Bugdresh. Sorry if I'm mispronouncing your name. Every broker has some of these, doesn't have some of these. These are not orders. These are what to do with your order. Okay? Don't confuse them. Market on close, market on open, day order, good till cancel, fill or kill, bracket order. So trailing orders here, trailing. Okay. But there's only 4 different orders. Okay? There's only 4 different orders. So what is a market order? Executes at the current market price, period. If market is closed, won't execute. Some brokers will execute at the next opening day session. It won't open at the night session. It'll do it a day session. Most will just kick you out, but I'm explaining to you so you guys understand. If market is closed, all right, some brokers will execute at the next day session, opening price. Okay? That's what it is.
And that's when you want to get a fast fill right now.
Yeah, Bodine, that's OCO. That's one
Yep.
cancels the other. One triggers. That's OCO right here. That's a procedure. Because you still got to tell what kind of order you had and what kind of order you want. We'll go through this, okay? I mean, to me, this is so basic. It's like somebody teaching me ABCs again. But I understand. You guys need to know this. Speaking of this, what's the market doing?
Going up.
Good. Are you long?
Mm-mm.
Are you short?
Nope.
Oh, okay. All right. All right. Limit order. For buys, limits how much you pay for your stock. Okay. Limits how much you pay and for sells, actually. It's the same thing. It limits how much you limits it. Okay. In other words, limits how much you pay for your stock. So for buys, if stock is at 20 and you want it at 19, that's a limit order. For shorts, if stock is at 20 and you want it at 21, that's a limit order. A limit order for buys is always below current price, and limit order for shorts is always above current price. All right? Understand?
Yep. So this is where you want to get into the market at a specific price.
Okay.
Market order is you want to get in now, whatever the market price is.
Exactly. Okay. A limit order is good for profit taking. A profit taking. So in other words, you buy at 20 and you want to liquidate at 22, set an alert to sell at 22. You understand?
And when you get into procedures, it'll all make sense how you use these.
Yeah, but these are don't get into this before you get into this.
Right.
This is just telling you what to do with these. You understand? If you don't understand these, you don't need to worry about these. Okay. 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 And I'll explain each and every one of these using these. Okay. So now, and by the way, you could find this on encyclopedia. I mean, you could find this anywhere online.
You could Google this. Yeah.
Yeah, you can Google this. Nothing here is unique to me. Okay. Nothing here is unique, and there's nothing here that I haven't learned 29 or I don't know how many years ago.
Yeah.
A stop order. A stop order is an order that triggers and becomes a market order. So, let's say your stock is at $19 and you want to buy at $20. So, a stop order for a long is always above current price, and a stop order for a short position is always below current price. A stop order is the opposite of a limit order. You know how limit order you want to buy cheap? Here you want to pay more. Understand? Okay. Okay. Can I enlarge my font size? Sure, I can. Okay. I just made them bigger. All right. A stop limit order. A stop limit order is different than a stop order or a limit order. It's a combination of the two. So what happens is this. A stop order becomes a limit order or a limit range order. Some brokers have that too. I like those actually. When the stop is triggered. Okay. So otherwise, it works just like a regular stop order. So let's say a stock is at 19. Yeah, I'll post this for you guys. I'll post all this. Let's say stock is at 15, okay? And you want to buy it at 20. But you don't want to pay more than $20.05. That's your limit, $21.05. So your stop is at 20 and your limit is at 21.05. You understand? So it triggers a stop order, but it will limit your price. So if it goes too fast above, this is good for small caps. Large caps,
Yep.
you don't have to worry about it. But small caps, you don't want, sometimes you're worried because it's moving so fast. You want to get your price, or you don't want it to fill at all. So that's what that's good for. Okay. So basically, you set your stop, but your stop, because remember, a stop order will turn into a market order. And if you have a stock that's moving in 30 seconds, like yesterday morning, from $20 to $22 in like one boot, you're not going to get filled. So there's pros and cons. A stop order will guarantee you'll get filled because it's going to turn into a market order. A stop limit order does not guarantee you will get filled, but it does guarantee that if you do get filled, you will get filled at a good price.
Yep. So
Just
that we
watch
use a
this
lot in
few
the futures
times.
markets. Yep.
Exactly. But otherwise, it works the same way. So market order, right now at the current price. Limit order, you want to be cheap. You want to be cheap about it. You want to get better than the current price. You don't want to chase. Stop, you want it to go through your price. You want momentum, okay? And a stop limit is you want momentum, but you don't want it to run away with you with momentum, okay? A stop order could be bypassed if the stock drops fast enough through the price. Nope, a stop order will never be bypassed. It'll just become a stop order triggers a market order. You see, a stop order is not an order. A stop order is just something that tells the broker that if price hits that thing, your order becomes a market order. So that's why I'm saying now with large caps, it's okay. Really, you're going to get filled. You know what I mean? You're not going to get, but with small caps, imagine you're trading a stock and it moves in 10 seconds from 5 to 10. It can happen. And you're like, well, I want to get filled at 5. I don't want to get filled at 10. If it goes too fast, I just don't want to get filled. So you put a stop limit, say stop at 5 with a limit at 5:20 or 5:30. And then it'll go up to that price. And if it does fill, you'll get filled. If not, you won't. Okay. Yeah, paper trade till you get. If you don't understand this, you should not be trading with real money. Or better yet, you should be trading with one share, which is actually better than trading with real. The best thing you could do till you understand it, like you need to understand this like your first language. Like I have to think about this to make sense because it's like me trying to figure out how to move my fingers. You know what I mean? don't mess with, don't think you'll figure this out, because I'm going to tell you something. 20% of all of your mistakes will be caused by this.
Yep.
20%. 20% of all your trading boo-boos will be caused by the type of orders you place. Now, let me talk procedure now, okay? Let's talk procedure. All right? That's the best thing you could be doing, Becky. She's actually taking my advice. Okay. Sorry,
Yeah, I mean, we've all been there. There's nothing worse, Roger, than absolutely reading the market correctly, knowing what you want to do, and you enter the wrong order.
Yeah.
Or the wrong procedure.
Richie, would you say it's about 20%? I'm telling you, Richie's a professional trader. I know this from remember, I started out as a broker. I worked for a brokerage firm, and then I had my own brokerage firm for years. For years. 20% of all your screw ups will be caused by this. Not because you're stupid, because it just happens to everybody, Don't think you're special. I'm gonna put this VIP room in the members area for all the programs. Okay, that's what we're gonna do, Raleigh. All right. So we'll tell Deanna to put this segment when we start. I don't remember what time we started the.
It'll be easy to edit, but you're right.
Okay,
Yep.
so let's make a note of that. Okay. So now that you understand the 4 different order types, the market order is just whatever price is right now. Limit order, I want to be cheap about it. Stop is the opposite of limit order. I want to pay more than what it costs right now. And a stop limit is a combination of a stop limit. You want to break out, but you want it to, not run away with the circus. Okay? Yeah, I bet. So let's talk about the different type of orders. Okay? The different ways to manage your orders. Managing your orders. Okay? And I'll put this sheet with it. Okay? With it. Okay? This is managing your orders. The orders are above. You need to understand this. This is just procedure. So trailing is telling you how far behind your order you want to put your stop loss or your profit target if you want to trail your profit target. So let's say a stock is at 15. And if it goes below 12 and a half, you don't want it anymore. And you want to take your profit at 20. So you put a trailing, but what you want it to do is this. If it goes from 15 to 17, you want to move your stop loss from 12 and a half to 15. Basically, every $2.50 the stock goes up, you want to move your stop loss $2. I'm making this up. You can do any way you want. That's a trailing order. How many times have I used a trailing order in my life? Ask me.
How many, Roger?
Never. Not once. I've never used a trailing order in my life. I've never used a trailing order in my life. Okay. All right. One cancels the other order. Now that is this is very, I've never used it in my, have you ever used it, Richie? There you go. See, look, notice we're not in the same room. We're saying exactly the same thing, just experience. I've never used a trailing order in my life because I've never found the need for it because I don't trail anything. I'll adjust the order. I don't like to automatically trail anything. I don't like the computer doing anything for me. So I've never, in my life, I've never used a trailing order. I don't know how else to explain it to you. Now, the next one is a good one. I like the next one. I should use the next one more and more. As a matter of fact, I'm old school. That's why I haven't used it. I'm old school. Now, one cancels the other is a good order. I like that order. And keep in mind, you got to understand something, folks. I started trading when we were not in a very digital age. Okay. So all this digital mumbo jumbo kind of crept up on me in the last 10, 15 years. I mean, I was still doing my own, so I'm not as digital as a lot of these algo guys who are doing all these fancy schmancy orders. I like to use regular, I'm a meat and potatoes kind of trader. I don't trust markets doing anything without me. Okay. So I've never used a trailing order. If you like to use it, God bless. Don't come to me asking for experience. I've never once used it in my life. Now, the next one is a good type of order. That's a one cancels the other. And that is actually very useful if you execute off of a platform. I have a friend who trades these small caps, and he actually hooked me up with this way of trading. And he uses TradingView, and he uses brokers. He actually uses TradeStation, which I'm not going to use TradeStation anymore. But there are several. There's Tradier. There's others that integrate with it, and you could put a bracket order. And what a bracket order does is you put your stop loss and your profit target, and when one executes, you cancel the other automatically. And I'll tell you how useful that is. I would tell you, if you knew how many people forget to cancel their stop loss orders after they get filled, right, Raleigh?
Yeah, absolutely. OCOs were brilliant, are brilliant.
Yeah. So people place a good till cancel order on their stop loss. They execute their trade. They go out of town, and next thing you know, they have a short. But this happens all the time. So OCO orders are brilliant type of orders. I'm going to start using them more and more. As a matter of fact, I'm going to start. We have a subscription here with TradingView. I'm going to start trying to execute these high flyers on TradingView and see if I can gravitate to just using TradingView for them because I want to start trading them off the chart because of the OCO orders.
Link to a broker. Yep.
Yeah. TradingView, you could link to about 5 brokers, and 4
Okay.
out of those 5 are actually good brokers. And I want to be able to set up everything for my high flyers on it, completely different screen, and just use them. So I'm going to be experimenting with a lot of these OCO orders. They're going to save me a big headache.
Great. Yeah. And, you know, to anybody that's got multiple trades on at the same time, I guarantee you, we've all forgotten about removing an order after we've hit our
All the
profit
time.
or our stop. And next thing you know, you're in a trade. You had no idea.
All the time. Now, so it's great order. It's a great order. Before I started using them, I would have yeah, exactly. It's so much better. Triggered with staggered exits of Rosalind. Every platform is different. I've never done 50, 20, 30. I don't usually do that. I'll do like 50. What I'll do is I'll just place the trade for 50%. See, Rosalind, what you're talking about is what I'm trying to avoid you guys doing. Automation. Stop trying to get the machine to automate for you. You are going to get into a deep doo-doo doing that. I'm telling you, I see it coming a mile away. Don't do that. Don't use trailing orders. Don't program your OCOs for anything other than eliminating your stop losses. Trust me, you're going to screw yourself up. You're going to double book yourself. You got to understand, Rosalind. I was a broker 30 years ago. I started out as a broker. I've seen all this with my eyes time and time again. Do not do it. You're asking for a recipe for disaster, okay? It's not about how fancy you get with your orders, okay? All right, fill or kill order. Fill or kill order is great because fill or kill, and you don't really need a fill or kill nowadays but for back in the old days, fill or kill were great, and I'll tell you why. You would place an order, it would take a few minutes for you to get a fill back. So this order was, hey, I want it filled or killed. Okay, so you don't get double booked because you're changing your order. You're changing your order very frequently. So you want this order filled instantly or killed. In other words, if the price can't get filled right now at your price, you don't want it hanging out there. You want it killed almost instantly. Okay? Yeah, don't do automation. Rosalind, whatever you're scheming, and I see what you're scheming, don't do that. That's a recipe for disaster. Okay? Okay, what is a good till cancel order? That's an order that will stay in the books till you physically cancel it. I used to have a lot of problems with this in the old days because people would leave their stop losses or their rollover orders, and they would forget to cancel. So here, they're like, Roger, on this day, I want you to roll over my position to this position. Meanwhile, I'll put a stop loss on my position. They'd roll the position over and they would forget to cancel their stop loss. Big problem. Back in the day, there were some brokers, professional brokers, that would make you replace all your orders the same day.
Same day, right?
Same day. That's a market order. That's a day order. I prefer day orders. I'm old school. I want to have as much control over my orders as possible. Okay? What is market on open? As soon as the market opens, your order will get filled. Does that guarantee you get filled at the opening price? Absolutely not. It becomes a market order after the market opens, which means it can fill you at any price. Whatever, and obviously if you're trading Microsoft, we don't have to discuss this. But if you're trading a 50-cent stock that's doing this, that could be a problem. I'm just giving you information. What is a market on close order? Market on close orders are really good orders that I use sometimes with the pit when I want to execute at the end of the day. When I want to enter on close or when I want to exit on close. They're great orders for that. Okay? Now, there are probably a million other procedures. This is what you need to understand. Every broker, especially nowadays, has a different procedure for how they use their orders, okay? Here, I'm going to give you guys this document, okay? And maybe Matt can post it on YouTube. Was this a good session, folks? Was this a good session? Let me know. Was this a good session? Good. I'll have Deanna put here. Let me tell her right now, real quick, because I'm going to forget. Please put today's. I'll put it in the VIP room so everybody can access it. Okay.
Yeah, this was excellent, Roger.
Good. I'm just including this document for her. Wait till the end. And this doc in VIP room members area and in high flyers members area. Thank you. Okay. All right. So this is very simple. So folks, you should have this document. Deanna will put it in the VIP room members area, so everybody should have it, right? VIP is open to everybody, I believe.
Yes.
Yeah, so you should have it in the VIP room members area, and we'll label it different types, types of orders and how to use them effectively. Okay? Now, if you guys are still on the proverbial fence, I'm going to do we have any questions, Raleigh?
No, I tell you what, no, Roger, I mean, everybody has comprehended what you said, and we just had like 68 people come back immediately say, this was awesome.
Okay, great. I'm so happy to hear that.
Yep.
Very happy.
And once again, very, very supportive of your idea. Looking at TradingView, for example, as a sequestered platform just for these small caps and the work that you're looking to that. Tons of thumbs up about doing that. So no real questions, just more, thank yous.
Good. Yeah, and remember something. Every platform likes, okay, they're marketing, right? When they give you the platform, a lot of it is, hey, you should use our platform because it has this. And they're going to try to tell you, our platform allows you to do this, and our platform allows you to do this. And I couldn't care less. I don't pay attention to any of that stuff. All that stuff is going to confuse you and cause you to make mistakes. Learn the 4 basic orders, okay? Know when to use them. Understand. Oh, and for options, you should never use. You should never, ever use stop orders. Okay, you should use limit orders only for options. If you're trading the SPY, you could trade market orders. God bless, trade market. It's liquid as heck. But if you're trading like stocks, just use limit orders at the halfway point. You should only be trading limit orders with options, and you shouldn't be using any trailing anything. You shouldn't be using any of that automation. Forget about. If you use that stuff with options, then you're just a moron. Excuse my French. You are going to be your account is going to I'm telling you that into you in the nicest way possible. Options and all these order types. Oh my God. You are asking for trouble.
So quick question here, Roger, on that. So
Yes.
here's maybe a question to the room. So let's assume, for example, you're in Trading Zone Live and Matt issues an alert that says, get into SPY now.
Yes.
What type of option order is going to be placed on that zero-dated option?
Market order.
Exactly.
That thing has a spread between the bid and the offer of like 1/4 cent.
Yep.
Market order.
Because that question is asked a lot. It's a mark because you want to get in now.
Right. Yeah. Now, if you want to put a profit target, you could use a limit order and put a profit target, but don't you dare use a stop and a stop loss on an option. Oy. Ask me, how many times have I used a stop loss order on an option in 32 years? Not one time.
Not one time, never.
And you think I'm going to start now? No. So all this stuff about all these cool order types and all of that stuff, forget about it if you're trading options. Limit orders, old school. None of this automation. You want to get into trouble? You want to get stopped out prematurely? Please knock yourself out. Be my guest. Okay? So I'm telling you right now. And folks, I've been doing this for 32 years. Trust me on this. I have no intention to lie to you. I'm not going to make any more money whether I tell you to use a market order or a limit order. There's nothing in it for me, okay? All right, folks. I'm going to give you a class. I guess, Raleigh, last week when we launched this, I guess a lot of people were out of town.
Yes.
Because I'm getting a bunch of emails saying I didn't see it. I want to see the replay. I want to. So I'm just going to do it again for you guys because a lot of you are coming in, and today is 32 years since I've been in this in this business. Please don't send me emails and ask me how to use those different how to manage your orders with options, because my response will not. You will not like my response. My response will not be pleasant. Okay. All right, guys.
Exactly. And folks, I just want to let the people on YouTube know that now is your time to rejoin the Zoom room. We are not allowed to do promotional events on YouTube or play music or any fun stuff like that. So I'm going to be closing the YouTube channel, and I encourage you to come over to the